right, well, thank you very much and good morning, everyone. It's great to be here. So what I'm going to talk about today is primarily focusing on some of the big issues affecting wheat markets, both last year and kind of what's coming up in 2023. So I've been with the commission almost 17 years now, and I remember thinking that 07, 08 was probably the most exciting year that I would see when prices hit $20. But I would definitely say that 2022 really threw a lot at the market, and a lot of it was unpredictable and unanticipated. And unfortunately, I think we're going to continue to see that. So I just want to cover some of those issues. But I guess just a quick intro for anyone who might not be familiar with the Wheat Commission. So it is the checkoff organization for wheat. So most major commodities have a checkoff program. Our checkoff is $0.015 per bushel. And then we are run by a board of directors. So that is 7 producers. They set the budget, they decide where the money is spent. And then we have 5 staff members to carry out those programs. This is our current slate of producer board members. You may see some familiar faces up there. 6 of them are elected by producers in their district. 1 is appointed by the governor. So you can see our mission here. I'm not going to read it, but really the commission started with the goal of finding and developing new markets for North Dakota wheat. And if you take a look at our budget in recent years, it's ranged from $4.5 to $5 million. Obviously, our income is dictated by production, so that does vary from year to year. And you can see our program areas. Really, there's 2 areas that encompass the large portion of our budget. So that is international marketing. Again, that was the main program area when the commission was started. We work with U.S. Wheat Associates. They are working directly with customers all around the world to promote our wheat and help them make purchasing decisions. And then more recently, we started focusing more on research. So that would be primarily at NDSU, wheat breeding programs, quality programs, agronomic research. We fund about 50 to 60 projects every year. And then the customer service component, again, that's more research and program development for our customers around the world. Okay, so hopping into some of the main wheat market factors. This isn't an all-inclusive list, but the ones I'm going to cover today. Of course, we have the Russia-Ukraine conflict, and then various world supply and demand factors to watch, including the drought in Argentina, the big crop in Australia that has some quality issues, and a few more that I will cover. And then here in the US, we have the ongoing drought in the hard red winter wheat region, which will be closely watched. And then I want to talk about our US export pace, because that's definitely something that's weighing a bit on markets. Okay, so starting with the Russia-Ukraine situation, and many of you may be familiar with this already, but if we look at world production, you can see that almost half of the world wheat production is in the EU, China, and India. Russia's at 10%, Ukraine at 4%, US and Canada between 4 and 6%. So really those 2 countries only account for 18% of world wheat production, or 14%, excuse me. So, it doesn't seem like a big deal in terms of production. But then when we look at share of exports, Russia is the world's largest wheat exporter. Ukraine counts for about 10%. So you're looking at close to 30% of world wheat exports that come from those 2 countries. And so that is why that situation has really caused big movements in the wheat market, is because you're talking about 30% of available export supplies being affected. Okay, so what have the impacts been? What's going on? So both countries continue to export. However, Ukraine's exports are largely dependent on that UN facilitated export corridor. Now in November, that was extended for 120 days. So things have been somewhat even keel. But leading up to that, one day Russia would say they weren't going to support the export corridor, market shot up. The next day they said they would, market shot down. So continuing to get pieces of news like that have affected the markets. So while Ukraine's exports have continued, the best data that I could see, they've only exported about a third of their normal exports. Obviously, grain production and logistics have been impacted by the war, so that's not too surprising. Now, Russia is expecting a record crop this year and potentially record exports. But this will be closely watched. The data that I can dig up does show so far exports are a bit below normal. And, they're going to largely depend on a few things. Insurance costs for shipping, insurance on the ships coming out of the Black Sea, those rates have skyrocketed. Also, some countries will not import Russian wheat due to political acceptance. And then internal logistics in Russia as well. So they're on, the estimate so far for record exports coming out of Russia, but it's going to be dependent on a lot of factors. So I also just want to point out the primary export destinations for the wheat coming out of Russia and Ukraine, because it's not necessarily directly where we export our wheat. It's different markets. So they tend to export a lot to African countries, other former Soviet Union countries. Turkey is a big buyer, some European countries. So while they don't directly compete with our higher quality wheat, recently, just due to world economic situations, high prices, we are starting to see Black Sea wheat enter some of those higher quality markets. Not a significant quantity, but we are seeing it. So I'd like to show this just to kind of point out the different scales of quality of wheat in the world. So in general, hard red spring wheat, Canadian spring wheat are considered the top quality. Customers pay a premium for these classes of wheat. But then here you have in the middle, Russia, Ukraine, some of the EU wheats, they're kind of medium to low quality. And so those wheats heavily compete in some of the more price sensitive markets. Whereas the majority of our wheat, even our hard red winter wheat, we're focusing on more quality conscious customers. And if you look at the top customers for US wheat, you'll see we have a different slate of export markets. So Mexico has been our top market the past couple of years. Obviously, we have a pretty good logistical advantage there. Philippines, Japan, two very large Asian customers. And then you have Taiwan, Indonesia, Thailand. All of those Asian customers are very high quality customers. However, price is definitely a factor when it comes to export demand. So these prices are a little bit outdated, but the trend is the same. So at the top here, the highest priced wheat in the world is hard red spring wheat and hard red winter wheat from the US. And then kind of in the middle, we have Australian and Canadian spring wheat. The red line is Russian, and then the bottom blue line is Ukraine. So in markets where maybe quality is not as important, they, obviously will choose some of these lower price origins of wheat. All right, so another factor is Argentina. So this left circle kind of shows where their main wheat producing region is, and you can see that's also an area that has been suffering from extreme drought. So they're kind of wrapping up their harvest right now. If we look at production, their production is expected to be half or less of what it was a year ago. So obviously lower supplies out of that country, lower exports. So on a world scale, they're not a huge player, but definitely affecting the world situation. And then the other big one, and I'll talk about this more, is here in the US, specifically the hard red winter wheat region. They're in their second year of drought. We like to joke that during the winter, that hard red winter wheat crop gets killed at least 10 to 12 times every year. Looks like it's going to be a disaster. last year definitely was a disaster. Their crop is rated the worst condition in I think like 30 or 40 years. Also, it's being reported that significant portions never emerged last fall or emerged poorly. So given that this would be the second year of drought, that's a very concerning area that the world's watching. And I don't want to get too antsy since we're under 2 or 3 feet of snow right now, but obviously got pretty dry in most of the spring wheat region last fall. And so again, another area of concern is just the drought up into the spring wheat region as well. All right. So taking a look at some of the world S&D factors. So this shows production in various producing countries. If you look at this year's data, really nothing too exciting with the exception of Argentina's reduced production. Australia is on pace to produce a record crop. Earlier in the season, there was a lot of concerns. They had rain, humidity that did cause some quality damage, but it's still yet to be seen how big of an impact that will have, if any. Given the demand for feed products around the world and the higher price of corn, it's likely that some of that quality damaged wheat will just go into feed channels. But if you look at the rest of the world, actually fairly stable production, nothing too crazy. However, if we start to look at just the wheat exporting countries, we're definitely seeing some changes this year. So we're looking at higher exportable supplies out of Canada, as well as Russia, but lower supplies out of Argentina and out of Ukraine. So we are seeing some shifts in the major exporting countries. When you look at the whole world situation, it looks pretty good. But when you start digging into the data, especially on the available export supply, we do see some reductions. So because of that, obviously, the trade shifts are expected. So this is export projections, higher out of Russia, higher out of Europe, higher out of Canada, lower out of Ukraine and Argentina, and fairly stable in most of the other exporting countries. A key factor that the market likes to look at is the ending stock levels. So this is the world values. And those have been declining over the last 4 years or so. Price tends to correlate fairly closely to the ending stock levels. So when ending stock levels get tight, we tend to see prices increase. But one thing, again, to focus on this green box here. So that is ending stocks in the major exporting countries. So first off, you'll see it's a pretty small percent of total world stocks. And they've been declining. So that is, again, a concerning issue in the market. Another slide on ending stocks. I think most people are aware of this by now, but China accounts for over half of the world ending stocks, and those are not available for export. So again, the exporter is about 20% of the world ending stocks. All right, so shifting to the US situation. So a lot of numbers up here, but one thing I want to point out is our stock levels have been declining the past few years. Production this year was fairly stable. Exports are expected to be slightly lower than last year, and this is a little concerning. Last year was the lowest exports we had seen in about 10 years. So expecting a further decline is not good news market-wise. Ending stocks, though, continue to tighten. Our stocks-to-use ratio here in the U.S. estimated at 31%, which is starting to get tight, but really 20% is kind of a magic number when the market really starts to get concerned. So all things considered, our supply levels are still considered fairly adequate here in the U.S. Okay. But if we look at the supply levels by class, this is where you'll see some of the differences. So hard red winter wheat supplies are quite a bit lower this year compared to a year ago because of the drought that they had. So if they have another drought year, these supply levels are just going to continue to fall. And again, that's why that's a market concern right now. All of the other classes of wheat, the supply levels are stable to slightly higher due to better production. So because of that lower hardwood winter wheat production and supply last year, we've definitely seen some abnormal shifts price-wise. So in general, hardwood spring wheat, so this is the Minneapolis futures trend line, has a pretty good premium over the hardwood winter wheat classes, usually 40 to 50 cents is average. That premium spiked in 2021 when we had a drought up here in the spring wheat region. And then we saw everything take off when Russia invaded Ukraine. All bets were off, all exchanges increased. We've kind of settled back down since then, but we'll see that Minneapolis and Kansas City were trading fairly close. Minneapolis is back to a bit of a premium, but most of that is due to the fact that the hardwood winter wheat crop was smaller, lower available supplies. So another shift that we're seeing due to that here in the US, this is domestic use, domestic food use. So for the current year, we're expecting higher hardwood spring wheat domestic use and lower hardwood winter wheat. Again, it's all due to availability of the different classes of wheat. So that lower hardwood winter wheat production has pushed up the demand for hardwood spring wheat domestically here in the US. All right, I'll spend a couple of minutes on exports because this is a pretty big deal for the market. So this is export pace for US wheat by class. And what you'll notice is most of the classes we're seeing a bit of an increase compared to last year. Again, the exception is the hardwood winter wheat, just because of lower supplies. But the concern for the market is last year was not a great export year. So we were hoping to see pretty big rebounds in US wheat exports, and we're really not seeing that. So that's one thing that has kind of been tempering market movement, is just that lack of demand. If we look at the hardwood spring wheat supply and demand situation, so our production was up 50% in 2022 once we recovered from the drought. If we look at our demand numbers, I've already mentioned domestic use projected 30% higher, but our exports projected only 10% higher. Ending stocks, though, continue to decline, and we now have a projected stocks to use ratio of only 23%. So that is getting fairly tight. And again, I think that's one reason the market is really probably going to be watching planting progress here and in Canada and those drought monitors, because the supplies of these high protein wheats are definitely tight. If we look at our export pace for spring wheat, the yellow line is current year's pace, green line is last year. So one of the big concerns is to our top two markets, the Philippines and Japan, we're down quite a bit. In the case of the Philippines, because of inflation, because of unemployment, wheat consumption overall is declining and they're going back to rice. So unfortunately, that's what we're seeing, and that's why our exports are down there. In the case of Japan, a couple of things, their population is declining, but also because of the price differential between US and Canadian, they're using a bit more Canadian wheat versus US. However, there is a bright side. We are seeing tremendous demand from Mexico. Most of our other Asian customers, our demand is steady to higher. And then we're also gaining market share in some non-traditional countries like Nigeria, El Salvador, and we've had a couple of big sales to Iraq. So it's interesting that we're down to some of our quality markets, but as we see population growth in other countries, demand for higher quality products, we're actually making market gains in non-traditional markets. But I do want to point out, so this is the Canadian wheat export pace. So they're faring a bit better. Their exports are quite a bit higher than last year. They had a huge crop this year, And as I've shown you, their price on the world market is cheaper. So I just want to point out Asia, since that is the top market for high protein wheat. The bulk of this increase is actually, they've been getting most of the Chinese business for high protein wheat. Very little US spring wheat going to China. Most of that demand is coming from Canada. So just to reiterate, so here's the hard-red spring wheat price, and here's the Canadian spring wheat. So that is something that is difficult for us in the export market, where we have customers say, unfortunately, hard-red spring wheat, depending on the time of year, has been anywhere from $25 to $40 per ton more expensive than Canadian. So even if they're dedicated US wheat customers, they've been buying smaller portions of Canadian wheat to balance the price. So I've talked about the export values, the difference there, but if we look at producer level prices, they're very, very similar. So it's not necessarily that the Canadian producers are getting paid more than US producers. Part of our disadvantage is the rail costs. So in Canada, they cap the railroad's revenues. And so their rates, for example, going west for export versus ours are almost always cheaper. And so that's one issue that we're facing when it comes to competitiveness of US wheat. All right, so just to wrap up the export situation, the main factors affecting US exports are, of course, high prices. So even though we tend to cater to high quality customers that are willing to pay high prices, there's just so much going on in the world, especially economically, that not all customers can continue to afford to purchase the wheat that they want. And then we have the freight cost, so rail rate is a big issue. Ocean freight, though, good news, that has been on the decline, so that's helping us a little bit. Last fall, the strength of the dollar was also a very big issue. Obviously, the stronger our dollar it is, more expensive for our customers to buy. Again, we've seen that decline, but the big one, and one that's we can't control or predict, is the geopolitical and economic uncertainty around the world. We have some customers that are just buying hand to mouth. They have no supplies on hand because the price is so volatile. Some customers that can't get credit to purchase wheat. There's currency issues. There is one glimmer of hope, is that there are some countries that are expanding their origins of imports. So countries that maybe only bought Black Sea wheat that are now concerned about the uncertainty of being able to get that wheat in a timely manner. We've seen them make small purchases from the US and Canada and other locations. And here's just the ocean freight rate index. I only have it going back to last spring, but you can see it really has dropped off, which helps our export situation. All right, so in summary, world production issues will be closely watched, especially as spring approaches, because the supplies in exporting countries are quite tight, and specifically North American spring wheat. And so again, I just mentioned the North American drought, watching it very closely in the hard red winter wheat region, and what happens up here this spring. The Russia-Ukraine situation will continue to impact markets, not just on a production or export base, but when pieces of news come out. The market trades those pieces of news very hard. It's been pretty quiet now, but anytime there's damage to a port, discussion of the export corridor, the market tends to react. Demand is a big issue. That's why I focus on our exports a lot, because they have been fairly lackluster. And that will continue to be impacted by geopolitical concerns, inflation, buying power of currencies, and other economic concerns. So some issues to consider and watch for 2023 when you're looking at prices. Russia-Ukraine news, pace of export shipments from Russia and also Australia. I'll be interested. I read a piece of news today that they're not so concerned about the quality coming out of Australia, but logistically, their system hasn't kept up with their increase in production. So sometimes they have issues exporting as much as they would like. The drought impacts here in the US and Canada, crop choices in North America, US export pace. So again, not an all-inclusive list, but I think some of the main things to focus on. I had also, just one last slide, included in my topic, issues affecting the wheat industry. But it's very interesting when you throw in a worldwide pandemic, when you throw in inflation, war, people suddenly become more concerned about just having wheat and food to purchase versus how it was produced. So a lot of these issues have kind of lost traction, at least short term. So, you know, we have the popularity of gluten-free or wheat-free diets. You know, in 2020, when people were stuck at home, many of them started baking again, returning to comfort foods. Folks that had lost their jobs, pasta is a very cheap meal source, and we really saw demand for wheat products increase. Consumer scrutiny of breeding and farming practices. We still deal with this, but again, everything has kind of taken a bit of a back burner. Chemical residue levels for wheat, glyphosate was a big one, specifically pre-harvest glyphosate applications. That's still an issue that we're working on. There are some customers that test the glyphosate residues, will not purchase wheat if it falls above a certain level. But again, a lot of this has become quiet in the last couple of years. And then we have trade barriers, and I'm not talking about just trade agreements or trade wars, but it's things like weed seeds, ergot, discrepancies over inspections of the loads that have caused issues in the past. And here I just want to show one last slide. So this is US wheat food use. And again, I just want to show the impact. We saw a huge decline here. This was the height of the Atkins diet. Low carb, no carb. We rebounded, and then a few years later, it was the wheat belly book, grain brain, wheat-free diet, and we once again saw a dip. We've kind of recovered from that. Wheat is definitely saw in a more positive light right now, but we're kind of always on our toes waiting for the next thing. So with that, I think I did use up all my time. Thank you very much for your attention. I hope you found some useful tidbits of information out of that. And I will stick around for a bit. Just grab me if you have any questions. Thank you.